Good morning, traders, and welcome to the Bookmap Live or Pro Trader webinar series. We continue today with JTrader, Joseph Traders, and we have him on every Wednesday as he goes through his equity trades and how he reads the order flow. He's going to do something unique and special today for the Pro Trader webinar series, and let's hand it off to him in just a second. Here, the introduction. You guys know who JTrader is. He's been trading for quite a while, since he was 18 years old, with equities and covered warrants or options, trading quite a bit of size. Now he's focusing on order flow scalping, mainly the US equities and options, and then also he's the main trader in his small cap room. We do have his contact information here if you want to reach out to Joseph, JTrader. You've got his website, his Twitter, YouTube, email, and some special offers here. Yeah, he does offer mentorship and education. Risk disclosure and general disclosure. All Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Okay, Joseph, so I think your screen is already up. Let me pop it out here and start presenting it. And we are good to go.
All right, so first of all, good morning, traders. So we're looking over here, Powell speaking, 10 o'clock. So we started seeing over here our first dump on ES from 3996 to 3976, so 20 points. Now it's bouncing, and we're having a first pullback into that level of liquidity. So we're here to talk about Tesla. We're shorting Tesla 2 days in a row. And this morning, my plan is if we're going to close below the technical area of 180, which we're touching right now, next hour is going to be 170. So what to do over here? Few of the traders this morning that were looking to trade before the data, so Powell speaking, had found, I believe, some chop in ES in SPY. That's the reason why when we have big news, or you trade simply just after the news, or you wait 15, 30 minutes after the news. I prefer to wait a little bit to see the trend of the market. That's the reason why this morning was saying, let's wait on to trade ES. Let's start trading Tesla. Let's start trading Meta and others. So we've been loading the boat on a few scenarios. So this is, for example, what we've been doing over here in the room this morning. So the team over here started shorting into this 186, covering partials, re-adding over here into the 184s, trimming partials down. So we're getting that all moving. This is the photocopy of what we did yesterday that we shorted the entire morning. The main point for me is that a lot of traders, and you can see over here the traders that took some good trades today in the room, like, for example, FRTX, where they're short over here in the 360s, and then covering all the way down. This is a small cap. Essentially, traders often overtrade, don't follow only A+ setups from their playbook, but they may start trading also B setups. And I would say as well, they tend to give back often profits of a good green day, trading often after 10:30, 11 o'clock. So the majority of the times into the lunchtime, you will see more algos playing. It's really a fact that institutional, they simply go away. They put out the algos for the lunchtime, and then you will see more activity around 1:32 p.m. So the two best time for me to trade and where I really like to focus are from 9:30 till 10:30, 10:45, and then from 1:30, 2 o'clock till the close. Those are the best, most liquid and volatile times. If you trade big caps, you have a lot of possibility to trade in the afternoon. For example, last week and the week before, we started having a lot of trends after 1:32 p.m. If you trade instead more small caps, I would focus in pre-market trading. For example, we had this pre-market SVRE, FTRX, SIDU. We all traded short, almost from the top on these, using Bookmap, and after we'll review some of these. If you trade also small caps, I would suggest to stay for the first 30 minutes out of the gate, 9:30 to 10 o'clock, for the A plus setups. Because if we have faders, the majority of faders will happen in the first 30 minutes. So don't try too much to trade during the day. Often you will get chopped unless you have a very proven backtested strategy. So let's start with Tesla. I think this is the most interesting one. Of course, I will share also over here the watch list, so you know exactly what we are going to cover. This is the watch list on Tesla. I said over here we have two possible strategies: over under puts 180. So on the break of the opening structure that we'll see soon, I was looking for 180 puts, and in case of a bounce, we are looking for calls. This is the chart that we shared in pre-market, and you can see that this was the key level that I was waiting, and on a confirmation of this breakdown, target 180, I think we got that 180. And now on a close of today below 180, I will be looking for a main target 170. This is the ideal setup that we took this morning. This is the team. So the traders were shorting this today. The reason to short is a continuation of the main trend that we saw on the daily and hourly chart. Again, as you can see over here, we have a continuation forming lower highs and lower lows. We are also below the main point of control weekly, which is at 193.50. This is a pretty good guide because it tells you that in this area, the majority of the volume was traded, and now we're just like unwinding. We are below the main pivot point. Now, we got before, this was pre-market, to the first S1, so support one pivot, and then went 1 to 180. One of the setups that Bruce knows even better than me, because I think we've been talking about this so often, is that I'm looking for V patterns at the gate. So if I'm looking into a short, I will be looking for a push, so a reversal V pattern, and fail. And this is exactly what we had. So the point is always know and prepare in advance your plan so that when you're going to trade it, you know exactly where's your risk, where's your stop, where are your targets. So the first thing that I will tell you, trader, is calculate your risk-reward ratio before getting into the trade. This is the main key for a correct risk management plan. So risk-reward ratio. If you're a day trader, it really changes from a scalper. It really changes to a swing day trader. So I'm looking for risk 1, at least a reward between 3 and 4 R. Okay, this is the risk reward ratio that I want to look for. So I don't want to, let's say, risk $500 to make $500. The only way that I will be profitable is having a system 90-95% win rate. I want to instead stay with profit factor or risk reward ratio of 1 to 3 or 4 or even more. Depends from the context, depends from the market scenario. It depends also from the traded day. This environment gave us this morning an entry exactly at this zone over here. So we shorted into this zone, and we shorted as soon, so I will zoom in, focusing today on teaching you some aspect, okay, not everything because we will need to stay over here days, but some aspects of how I risk in trades and how I teach traders to risk. So this morning we had, you can see a first dip forming a higher low, forming another higher low, forming another higher low. So at this point, and that's the reason why I generally don't like to trade the first couple of minutes out of the gate. At this point, we have three consecutive higher lows. We form a peak over here, and we still don't know that this is going to be a peak. So I'm going to zoom out again to show you the structure. If you look over here on our chart, over here on the right, we can see that the main trend is down, right? Yesterday, I shorted here, and we covered the last position over here. Today, we shorted here, and we covered here with these reads over here. This is the trend today, okay? So unwinding over here. And look at this point. We breached, so we had a breakout over here, 186. If you follow the content that I share often, I said the best shorts are when longs are trapped, right? I always say that. So a major bull trap. Shorts are trapped, you go long. Bulls are trapped, you go short. Over here, bulls are trapped. So that's the best short scenario possible. Then you have to wait a timing. And over here, I'm looking for higher lows, higher highs to reverse and start forming over here lower highs, lower lows. So exactly at this time over here, we have a reversal, a break of this higher lows, higher highs scenario structure. And then over here, starting forming the first backside of the move. If you zoom out, you will recognize that all of this, and over here we can see a 1 minute chart, okay? All of this is what I like to call reversal V pattern. So that is your major short. Now, for who just came, this is how the team traded today. So on the back side over here, team loaded, cover first partial, cover another partial. Over here, covers were around 25 and 25%. Another 25 over here, re-adding to full size, average moving down, covering a first 10%, 10%, 25, 25, and now the team is still holding for a major unwind. How to trail something like this and where to put the stop. So as soon as, so this is the structure of Bookmap, okay? Now I need to calculate and show you about the risk reward scenario. Today we're talking about risk management, okay? If you have questions, you can ask me. So how to trail something like this? I mean, everybody, me personally, okay? I always want to find the big moves, the big trades. I mean, I love, and I would love to short over here and hold completely full size over here. I would love it. It's not possible. What I did though was buying over here on this first curl in the 120s and holding for a swing. That was good. It's not very hard. You ride over here with the tail. It's not very hard. But it's not possible to always find a top short and cover the dip, or to buy the dip and always sell to the top. So we need to have certain levels where we're gonna look for targets, scale out. So remember, our trade this morning came exactly at this point where I'm pointing out over here, exactly this point over here, the 186, 185, 70s here. Now you can see that the trend on the higher time frame. So HCF is forming lower highs, lower lows, lower highs, lower lows. So we have a descending trend, okay, or a bearish trend. Before taking the trade, I already have my levels traced. And I want to share something with you.
Joseph, is it possible to maybe, I mean, your screen is super high res, to maybe make it a bit more
Like this?
readable? Yeah, also the bookmap screen, I think. Yeah, I guess you can't on the symbols up above, etc. And seeing the price.
Is
So
there a
it,
way,
it,
Bruce,
it would be
to...
the overall resolution on the, no, not in bookmap there. Not
Oh, okay, okay.
Yeah.
So let me see. Then it will reformat everything and it will be...
Okay. All right. So next time.
okay. So I will tell you over here, traders, what are the numbers, but this peak over here is 186.50. And this low over here, 184.60. So before taking the trade over here, I'm looking for my targets and for my risk. Okay. What does it mean? I need to calculate if this trade is going to really be worth taking it, right? If, okay, and this is very important, if I don't have, as I said before, a possible target of 3 to 4R, forget about taking the trade. Okay. I would like to know how many traders before taking the trade, or could be futures, could be stocks, whatever. But I would like to know how many traders do this in advance. Because if you would do this, even if with a 50% or 40% win rate, you would be profitable. That's the main point. It's not, looking for the holy grail, which I can tell you can find, but it's not about finding the holy grail 90% win rate that you will be successful. You'll be successful with more of 40, 50, 60% win rate strategy, but that gives you at least 3R return every single time. This was what I was saying over here today. 924 on close below 180, Tesla target 170. So I already had in mind the trades. Also over here, alerting at 931, short Tesla. You see, I alert over here the short 186 and 20. So let's go to check this 186 and 20. And I will point on Bookmap so that you understand my risk reward ratio, okay? So I said, let's look for this 186.20, which is exactly this point. So this is exactly in 931 and 05 seconds. 931 and 05 seconds here. This is 931 and 05 seconds here. 186 and 20 short, risking 186 and 50. So I gave a risk of 30 to 40 cents, and a target that I was calling by rules was 180 today. So risking 40 cents for making almost 6 points. Of course, you can see how the trader before, or the members, they scale out because it's in human nature not believing in what you're going to trade that it will eventually work until that target that you are pre-planned. It's in the human nature to have doubts. And it's also in the human nature to start looking at, even if you don't look at the P&L, you will still look at the points that you're making and that you're scaling out. Of course, the perfect bot, the perfect trading system would have short at 186 and 20, risking 186 and 40 or 60, 40 cents, and would have took the trade until that 180, having something like 20R plus. But this is not possible. We are humans. So we will make errors. We'll be having FOMO. We'll be having driven sometimes by fear, emotions. And of course, you won't have that risk reward ratio of 20R. You will have that risk reward ratio over here of 7, 8, 9R, which is still good. It's still going to bring you profits. It's still going to make you successful, but it's not going to be as you would do without any emotions. So getting back to our plan, we need the risk reward ratio. At least what I teach is to have always a risk reward ratio before you take the trade. Because in that way, if you know that this is our risk, this is our entry, this zone over here, there will be who enters 186 and 20, who enters 186. And as I said, the level of the entry is this. That's the risk. And that's a target that we had from the daily higher time frame. So if you know this, you can calculate over here 40 cents risk, that your 1R, and then you will calculate the 180. And that 180 for 40 cents, 6 points, is going to be more than 20R. Now, as I said, you have to consider your scaling out. So you have to make an average at the end of your average exit take profit position. Let's say it's going to be maybe 4 points. That will be 4R. Okay, sorry, 10R. Now, how Bookmap can help you in this? Okay, and I want to bring an example over here of a trader. And this trader is personally not about this as very sorry traders, but this is another chart that we'll share after. I want to bring an example of my wife and an error that she does, okay, which is not really an error because taking profit is never an error, but it's about something that I prefer not to do it. So if I'm short, as we said this area, 186 and 20s, 186, risking 186 and 50, okay? So we'll put over here. So we are short 186 and 20, that was the alert, risking 186 and 50. Of course, you'll get filled at 60, maybe 70. And this is an example of the play. A lot of traders, and you can see over here, so we're gonna make the trailing. These are the covers. Okay. So that 184 and 40, the first target that over here we had was this point over here. Okay. So we're going to put over here in this way. So it's going to be easy to understand. And this is really guiding you in the entire process. So this is the first cover of trader, 25%. And it's over here, 25% first cover. Okay. So now you can analyze the risk reward ratio. So when you get out at 25%, is because you have to have pre-plan. It's not because I see a heat map and I'm getting out. That's wrong. I mean, I could get out over here, over here, over here, over here. Instead, the trader over here took the trade, got out the first partial at 184 and 40. So 186 and 20, 184 and 40, I think is what? 1.8, okay? 1.8. So that's at least 4.2R in the first exit. Okay, so this exit, being that we're risking 40 cents, and we made 1.80 cents in the first target. So the first target is 4.2R. If I'm sorry, 4.5R. If I'm mistaken, traders, let me know. Second thing, and after we review also this risk management. So let's go back here. Second thing, now it's about not giving back profits. because it's easy to analyze a perfect trade, a trade that goes good, lower highs, lower lows, you're short, and everything works, right? So even in the worst case scenario, even if you don't trade good, you'll still be profitable because the trade is simply going. The point is, you have to protect yourself. And that's what traders often don't think about. They don't think about the trade can reverse, the stock can reverse, the future, whatever you're looking for. It can be a news, maybe you are disattentive, power speaks, and you're still like full size short, and you don't have the clue of what to do. Well, before taking the trade, before knowing where's your first target, and by the way, this first target was over here because it was already 4-hour return, and because it was a big heat map, and it was a pre-market support. Okay, so there you go. And all this was alerted while we were doing it. But once we are over here, you have to know the rules. So you have to know now where is your 50% retracement. You're short 186.20. You got to 184.40. So you're going to look for the 185 and 60, 185 and 20s, something like that. So in this area, between 40 and 50%, you're going to move your trail. Why? Because you still want the remaining position, that 75% is going to be at 2R at least. Okay? So that altogether, at least you will have that 3R return. Okay? I prefer to use this kind of rule. And then, of course, with technical levels, I will move up or down. Like, for example, traders, I see this big heat map. I'll move my trailing from the 186.20 average down to the 185. Okay, over here. The trader here, the trader in this, in Tesla, traded using a correct risk reward ratio entry. So what it means, he was calculating the risk reward ratio, okay? But also has to understand that a trade is always evolving. Therefore, he needs to then put the correct trailing, okay? So over here, therefore, needs to find correct trailing management. So it's not about only risk management, it's also about trailing or target or trailing risk management, okay? Trailing management. Another thing, and if you have questions, please reach out. Another thing over here that I would like to go over is how to start looking traders for maximizing your profits. Okay, so maximizing your trades. How you can do that? I'm gonna cancel all this. Okay. So you can see over here the covers. Okay, 25, 25, 25 over here. Around here was a 20, 25, 25, and then with 3 ads. Well, I suggest you to start using Bookmap to find those levels where you can re-add and scale out. If you start looking, let me see over here. This tool, just 1 second, sorry. Okay, if we start looking over here at Bookmap, we can see that we have lower highs, lower lows. all along the way. Lower high, lower low, lower high, lower low, higher high. At this point, exactly this point, we start forming higher low. So when we form a higher low, and then we have also a higher high breakout, we have a major pullback. Where the pullback happened? Into this VWAP zone. So if you look at this point, this is a 184 with a clear resistance. It's a clear resistance. And that's where the trader over here joined the trend. Okay, so rejoin the trend, scaled back in. So what you can get from this? One, the trader is looking to maximize profits. This was what I was saying a few minutes ago. At this point over here. But of course has to understand this average from here now will go down to this point over here. So the new risk is going to be maximum that 184 and 40. So this is why traders, because when you are in profit, you don't want to give back nothing, right? You want to hold, maximize your profits, and not giving back any kind of green. All right.
Yeah,
Make sense?
Joseph, I have lots of questions on this. So I see there's two entries up on the top there. So one as it's going into it, and one as it curls and it's going out of it.
Mhm.
So when the first entry is created, there's more risk on potentially because
Mhm.
it may just continue on upward.
Mhm.
So regardless, you're just at that point. How do you know where your stop is? How do you determine your stop?
Okay, that's a good question. There are many ways. One way to stop loss is to have a dollar risk per trade. For example, I want to risk 200 bucks per trade. So I'm putting my stop above this 186 and 50. So using this heat map over here, okay, my risk will be 200 bucks. So based on that risk, we can use hotkeys that calculate the amount of size you're going to trade. And this is very good because you have to do nothing. You just simply put over here your level that you want to enter. You set your risk at $200. The software will calculate instantly how many shares you're going to trade short. Okay, so this is the first trade. So it gives you a correct idea of the risk management you are aware of, that you're going to accept and you're going to take into your trading. More than 200 bucks, you're not going to risk. That's a very, very cool feature. The second, I would say, way to do it is having a dollar risk on the chart. For example, if traders over here are generally looking to trade big caps, every single big cap or mid cap has a different price. So you need to know, for example, a $100 stock, how many shares? If you're trading something like Tesla, $200 stock, how many shares? If you're trading $200 stocks, how many shares? And of course, you can break it even 100, 150, 200, and so on. So having, for example, on something like Tesla, maybe we're risking 1 to $1.5 per trade, okay, of the underlying stock. So in this case, we know that we'll never risk more than $1.5. And this means that our return, if we're looking for 3R and we're risking $1 in that case, our return has to be between $3 and $4.5 per trade. So it will be the return. Okay. So this is the second example.
So
there's another one.
Joseph, yeah, I mean, this sounds all good with the numbers, but the setup and the high probability here that you're looking for comes first, no?
So we have over here two potential good exits, 187, because it's a high liquidity area, but also we have the 186 and 50 because we're shorting into that heat map, plus it's a technical area from pre-market support, and also my strategy.
Okay.
So knowing this, I have a correct risk that is given from strategy, is given from liquidity. So we have a protection in our favor, sellers. And then also we have the strategy, it could be many, if you have strategy traders, where you simply going to risk a technical level for your trade. Okay, this is for Tesla. And over here, we can start looking for the technical area. So we are looking for the previous day low. This is the previous day low, traders. So it's always an important area. You can see that we are rejecting that area. So once we reject, we're risking just that top above over here of the technical area, this point over here. All right.
Okay. So no, this is excellent. I'm just wondering though about specific instruments and how much volatility is in a move that may take you out of your stops there. So I know that the trader here in this, maybe you can talk about it, like they were in half a position on the way up and then half a position on the way down.
Okay. So here on the trade short that the trader took, this is a full size position because we have a very low risk. And because over here, we see that it's technical level. It's a major bull trap formation that we can spot over here with Bookmap. And we have also, once we join over here the trade, the confirmation of having a target, which was calculated over here between 184 and 185 and 50. So we have a good risk reward ratio. Okay. The traders, is exactly in this area. So in this area here. So this is the entry. You're going to put over here, entry. Over here, we have the risk, 186 and 50. And over here, first target, 184 and 50. So the risk and the full size position mostly comes because we have a correct risk reward ratio. So it's the fact that we have at least 3R of return that we are taking full size. So knowing that the strategy works more than 70% of the time on this setup. more we have a lower risk, risking maximum 40, 50 cents. And we know that we're going to look for 3R at least. This is the reason why to load the boat.
So
Okay.
a question on if the trader does everything right here,
Mm-hmm.
and then they get stopped out just because of some market slop or volatility here.
Mm-hmm.
Um, what do you usually recommend? Like, because this worked out. Let's say, suppose they got stopped out.
Let's say it didn't work. This you mean, right?
No,
So how
it
many
worked. It
trades?
worked. It's just the stop was hit.
Mm-hmm.
So
Okay.
how do you overcome or deal with that emotion?
Okay. 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 This is a big question. One, we are not trading systems and we are not robots traders. So it's very hard sometimes to be systematic and be without emotions, being only technicals. That's the best way you can trade. So not making the P&L, not making stress influence your trading in any way, in any form. Having said this, if you take a trade and you get stopped out and eventually works, you feel some revenge trading, you have to ask questions. Okay. And question will be, is the trade that I'm going to take a setup in my playbook? Am I revenge trading? Where is my entry? Sorry, what is my risk reward ratio? So three main questions to understand once if you're trading your system. Second, if you're chasing your system or not. Third, what is the risk reward ratio? Because maybe you can trade your system. You could not even chase. Maybe you take a correct entry. Let's say a correct entry like the second one over here that we had Bruce at 184. But maybe that doesn't have a very good risk reward ratio. And what happens? Happens that you're going to take an entry with maybe 1R risk and 1R possible target. In that case, it's better to avoid the trade unless you have a 95, 90% win rate strategy. Okay. So it's very, very important to analyze all these aspects before a trade is done.
So if the trader gets stopped out of this uh, example, or if you got stopped out of this example
Mhm.
as a veteran trader, you would just say, okay, I'm just waiting for the next setup.
Exactly. Exactly. For example, here we have a trade on Meta. This is, I think, a correct setup. Uh, the trade got long. No, it's not a correct setup. Anyways, it's a good example of the trade over here that, took a wrong entry. So going long instead of going short, but recognized right away his error and stopped out immediately. How many times, for example, we were wrong and we don't stop out because maybe we think we can maybe reverse, we maybe can increase position, take a better average, and then the stock continues to go against us. So this is another example here of a correct, I would say, attitude of work that you must have. When something is not working and you recognize you're wrong, cut it immediately. A trader the other day was asking me that I think the trader was in a position on AMAM. The position that he told me he took was based on a wrong strategy. It was not a setup that he trades. And he was asking me what to do. I answered frankly and honest. And I told him that whenever I'm in a trade that I may take and I recognize and right away I see that this trade is not part of my strategy, I cut it immediately. Because it's not part of my niche, because I cannot have an edge over here. And personally, what I've seen from this, seen that it really saved me a lot of times. Because if I continue to hold a stock or a position, future, whatever I trade, that is based on a setup that I'm not trade, so not even a pattern, just hoping, it generally doesn't work good in my favor. Okay, it can be one time luck, and maybe the next time I blow up. So I prefer to simply cut my position when I recognize this is wrong. And over here, the trade is very, very good. So very good to see risk management like this. Okay, this is for me really how correct trading would be.
So we've talked, I think, in the past about the entry, multiple entries,
Mhm,
and why. Um, and you spoke earlier about multiple exits and why.
mhm,
However, there, how do you? I know the risk reward is the big part here. That you're looking for. But as let's suppose it starts going in your direction,
mhm.
and it maybe you take your first target. Now, do you move your stop to break even at that point?
Okay, so it depends what I'm trading. If I'm trading like an example over here on big caps, and we're taking the position uh, here, I will generally, it's a rule of thumb, like generally, not always. It really depends after even what the market is doing. If I'm up good for the day, if it's a plus setup at the open, if it's like mid morning. So there are variables and rules for this. But generally, once the trade works 1.5 R in my direction, I move the stop break even or just a little bit in the money. You have to pay bars if it's a small cap. You have to pay fees, commissions, whatever, your time. So a little bit of reward you want it, even if the trade will work then and reverse against you. Won't work and go against you. So a rule of thumb, 1R, 1.5R, move the stop with break even. At least this for me. Of course, if a trader is trading and getting out too many times because he gets like chopped from too many cuts, means that his 1R is not really well, I would say, planned. Because, for example, you don't want to enter 50 times in about on something like Tesla, $1 range, and getting stopped out every single time for 30, 40 cents out, because that will eventually lead to a big loss. So what you want to do is to measure also the correct point of risk, the target, and then looking for your R return, because it's all based like that. Some of Bruce of the best trades that, for example, uh, I see traders that I'm mentoring are taking something like this SVRE, or I can share another example. I think it's even more understandable. Like let's say this. Let's see, like this over here. Let me bring it up an example. Okay, like this over here. This was an example from yesterday, and it's having preset orders out for targets. And this could be for long and short. In this case, we have a long example. So knowing your stop, in this case, the trader over here was risking this relative low, the 128, 127, based by rules. And then having, of course, um, a risk reward scenario. So always looking for at least 3R, 4R for the average of the move. And also, um, not really trading anymore the stock, but putting right away preset orders out when he's just into the trade. Because essentially, this avoids that the trader scales out too often. Okay. And this is, for example, a trade that I'm seeing right now from a trader. So having those levels, preset orders out based on the strategy, based on the levels that you see on the daily chart, based on the heat maps that will confirm the trade. You simply avoid to, one, scale out too much too soon. Second, to lower your R return. Third, I would say sometimes we have even anxiety, to take right away profit. Instead, if we would have trailed it better, held the trade, many times the stock would have paid much more than what we did. Okay, so this is obviously one of the key points in the risk management.
Yeah, yeah. This is what I was kind of driving at. It's kind of complex. That once you start taking partial profits and moving your stop to break even, you don't know necessarily what your edge is, potentially, because maybe if you just let it run, you could have huge winners, and maybe it comes back and you get stopped out every now and then for either break even or small loss.
Yeah,
But if you held it, and didn't mess with it, like, you could have had major winners.
exactly. Exactly, Bruce. It's totally like that. I mean, uh, just look at trades that we plan, that we have conviction to trade, and then maybe we are in the trade, we get like scared, afraid of something, we get out, maybe with a break even or with a loss, and then eventually the trade would work, and we only say to ourselves, if I had, like if I had followed my plan, if I had followed my strategy. Many times this happens, and that's the reason why the more systematic a trader will work, the more profitable it will become. So I simply really look for traders to more than emotionally, they should have always a very technical and cold approach to trading.
Yeah, I think it's really sound advice. The questions I have, though, are what I think can be really helpful for others, is to understand this kind of fiddling with the trade management, and how complex that makes things, because
Mhm.
you may take 1.5, take profit, partial profit, and then it comes back and stops you out at break even, and that may happen a bunch of times. But if you have, this is where your edge, you really have to wait and take your correct, trade that offers an edge, because if it comes back and you get stopped out a few times, that's a full stop. uh, Even though you may have had more winners, like, you get stopped out a few times, you overall you're going to be at a loss.
Mhm.
And so how do you recommend overcoming that? I guess by study, maybe one way is by studying your edge and knowing your edge, or would it also be, do you advocate maybe when you start to just take full in, full out, and don't worry about runners?
So you cannot trade without any kind of data. Data means over here putting a lot of effort in backtesting. So analyze, first of all, two different type of data. One is the data that comes from your trading, from your execution, from your trades. And one of the data that comes from your strategy. Because the data that comes out from your strategy, unless you have a trading system, a bot that trades automatically, will never be the same as the one that you trade, first of all. So you have to look in your data of the trades you take, okay? What is the main return that you have for that precise strategy setup that you're trading? There is going to be like a common denominator. So you want to see, for example, trading Tesla. We know that on a certain pattern, we're going to take 4 hour return by average. Okay, That is something that helps me build conviction in order to size up. And when I have the risk under control, I know that I can load the boat. The other way, the other thing to do is instead collect all the data. And this requires a lot of time, right? Unless you have Python and you can program it. Collect all the data, even with a spreadsheet on Excel, and collect all the trades that the system, the strategy gave. So not actually the one you took, but the system gave. And then you have to look the risk reward for every single trade that happened. You have to look also the average win versus average loss. You have to look at the drawdown that it gave on a, I would say, account, an hypothetical account. And you have to look how to increase this profit factor so that it will be more a winner than a loser, and the amount of win that you will have. So if you do all this, I believe your trading, whoever over here listens to us, will improve that much, because this is something that when I follow a trader, I make him do from the starting to the end of the plan. Without a doubt, you cannot go anywhere. It's not like I'm trading Tesla, I'm trading that pattern, and I don't know anything about it. You have to know everything. You have to become a specialist in what you do. If you want to also become like, a very good or perfect trader. Perfect trader, nobody will be ever a perfect trader unless you're a computer. But anyways, you'll be a good trader. Okay.
Yeah, thank you, Joseph. Just wanted to hear that, and the back testing, two different types of back testing, not only to determine you have an edge, but then also the trading strategy has an edge within your setup.
Exactly. Exactly. So I would like to go over, Bruce, over here, a trade in small caps right now. There was one of the main small caps of today. It's not a trade that I took, but it's something that I think is very important to make understand small cap traders how to trade. So we're going to look 1 second to SVRE. So SVRE, I'm going to put this bigger 1 second. SVRE was one of the main gappers this morning. We have a small float in the stock. We had a previous fader, but the news over here. Okay, we can look at the news. Install Save One system across the entire bus fleet of 1,200 vehicles. Over here, traders, you can, just like read more, but this was essentially the news. Okay, so we're not commenting over here the validity of the news or anything else. We have a disclaimer, of course, but you can, get to your own, opinion. I want to share instead why having also the Bookmap next to you gives an edge. So this is a trader over here this morning that by rules had a stop into this 220 area. Okay, exactly this point over here. But why this? Let's look at Bookmap over here. So we can see, I'm going to put over here. This is the open, all right, over here where I'm pointing. This is 930. And you can see that we start being sideways between $2 and 216. So not really any range, right? When we have over here, they really go, we can say, to remove this liquidity. So we have buyers over here removing the 214, then again over here 217. And then you can see that they go to eat really to remove the liquidity at 220. So this point, as we said before, what happens over here? We have a sequence of higher lows and higher highs. So this is the bullish part of the move, okay? If you short something like this, remember you're shorting a counter trend because the trend is up, at least the short-term trend of this this move over here. This is in the 4 minutes, right? This 4 minutes is going up. So over here, you're shorting counter trend. Once you start seeing instead this first trend break, and then you start seeing a sequence of lower highs, lower lows, you start having the backside of the move. The second trade that the member took over here, the trader took over here, 204, 205, is exactly this point that I'm showing over here. Exactly this point. So he's taking the backside of the move. And now there are two main things to calculate, or actually before taking the trade. One, what is going to be the target, and what is going to be the risk. So I'm going to use Bookmap over here to point out those levels. And we will zoom out like this, okay? So the risk was few cents, 5 cents generally, for what I teach, above this heat map and the peak over here. So this area, 225, okay? So we have a 225 exit, stop loss. We have a 208 average, around 2208 entry. So we're risking 17 cents, okay? So over here, we're gonna put 17 cents risk. Now, before taking the trade, okay, you have to make this plan. By knowing the strategy that you're taking, you know exactly where is going to be your target. The target by the strategy, the main target is 170 and 160. So an average of 165. Okay. So entering at let's say 208, 210 to 165 is going to be 165 is going to be something like 45 cents. Okay. So 45 cents target. Okay. Ideally, this means the trader doesn't scale out anything for the 45 cent of the unwind based on the target, TP. The trader over here scales out partial 190, partial at 178. So assuming that over here are small covers between over here 20 and 30%, the trader will hold the main core. It's very important over here to understand, one, the win rate of the setup. Two, the average return or profit factor. So the trader has to calculate this in advance. How can he calculate it? Not that morning. The trader has to calculate this during the weekend, when he has time, with his back testing. Because if you're not calculating how much is going to be your profit factor and your win rate, then you cannot take this trade. Okay, now, I can tell you that the trader knew over here what he was doing, so this was a correct entry. By looking at Bookmap, you have three main things over here that help you to stay in the trade. So to look for the major covers where we have 160, I'm pointing out over here, and 170. First thing is that we see these Bookmap levels, heat maps, that are moving down. So this level over here, we can see that before over here was orange, 12,000 shares. Ideally, and we know this for sure, but we can see that over here, basically somebody over here cancels and moves down here, 10,800 shares. So it moves again from here down till here, 10,000 shares. So I don't know 100% if this is the same player or whatever, but we have over here, first, this player, then is moving down, then is moving down. What it tells me over here, guys, stair-step down pattern. This is what I like to call a stair-step down pattern. It means that somebody is guiding down with the trend. All right. So he wants to get filled, he wants to execute, whatever. The point is he's bringing down also here the tension of the tape to the downside. The second thing is where we have the majority of the liquidity placed. Okay, so when you are at this point, the trader over here is taking the trade where we have the majority of the liquidity. Okay, over here, I start looking that the liquidity is always going down together with the trend. You can see over here, it's always going down. So we don't have any kind of, I would say, reversal over here, signal that tells me take out the position because we are reversing. We're still making lower highs, lower lows. The majority of the liquidity, once we're fading, I start seeing over here into this 165, 168 area. You can see also over here, two main heat maps over here, 28,000. Again, probably is the same one that is moving over here, 29,000. So we know this is a pretty good level where to cover partial. And you can see that trade over here exactly at that point, okay, on his third cover here, takes out a big partial off this. And then we have this major dip. You can see again over here the structure, right? Again, a big cover, sorry, a big liquidity area, 18,000, more down here, 10,000, more down here, another 5, over here, 7, 8, 9. So we have over here a block, okay, of liquidity, like a wall of buyers or that are placed, and the trader covers the majority of his position on here. The third is what I call the time. When we have faders, the best faders happen the first 30 minutes. These patterns love to die in the first 30 minutes. So three things, as we said, the liquidity over here moving down, stair step down pattern, looking for major liquidity zones where to take profit, because I know there could be a little bit of bounce, absorption and bounce. And third one is the time of the day. Okay, so this is the process on how you can hold the majority of your core for a good risk reward ratio trade.
Yeah, this is beautiful, Joseph. I mean, well explained, very articulately explained, and then using the heat map for your trade management here is beautiful.
Yeah, yeah, it's a correct process over here. Correct process. Uh, any more question, Bruce?
No, I mean, I don't see any questions in here in YouTube. Let me check Discord. Uh, just have to reiterate, like, I mean, like, there's someone put a question or kind of had an aha moment in here. I think Greg, to use Bookmap for the trade management in here, understanding the liquidity levels, and then how to manage your trade regarding the context between the liquidity levels and the other participants, and the way that you set up your risk reward and your, well, your stop loss and your take profits, and your risk reward ratios around this whole thing is really, really nice.
It's one of the most important aspects in trading if you want to become a profitable and consistent trader. Okay, let's check over here what else is going on, how Tesla is going. So right now we have Tesla that is starting to form over here higher lows and higher highs. So you can see that the trend is simply changing. And also we bounce from that 180. Remember, traders, what I said, a close today below 180, we have a potential failure to 170. It's not closing below 180. It's still holding. And right now it's curling and slowly bouncing. 11 o'clock, 11:15, I'm done for the day. I think that we covered the majority of the things. If you have any questions, you can reach out.
Let's see. No questions. I've pasted into the chat your contact information and your website. So if anyone's interested in the mentorship that Joseph offers here, it looks like you're really nicely mentored through the process here. And this is something like I think a lot of traders really struggle with, and it is really a core element here. Right behind, first having an edge and knowing you have an edge, and then the trade management. In fact, God, I don't know, Joseph, you may even probably think that the trade management is equally or maybe even more important. You can trade anything if you use proper trade management, basically.
Yeah, I believe that applying the correct risk management is even more important that sometimes that entry timing. So that your entry, a lot of traders focus on the entry. The entry is the most important thing. Well, is important. It's important, but not the most important thing. The most important thing for me is the risk management because we can have a bad entry, but we know how to manage it and we know when to cut it, when to take profit, and we can maximize our profit factors or our return. If we have the correct entry, perfect every single time, but you don't have any kind of risk management, it's going to be hard for you to be successful because that maybe one time you're losing or two times out of 10 or whatever is going to simply kill your P&L and your, I would say, your balance.
Yeah, yeah, it's so important, and it's really an aspect that's not covered in detail a lot. It was thank you very much for going through it in detail in this webinar. Also, that was
Yeah.
rather gutsy to show your wife's trade.
Uh,
I hope you are fine for the rest of the day. I wish you well. Um,
Traders, if you have any requests, just let me know.
no other comments or questions here. So thank you very much, Joseph, and let you have the last word here.
Okay. Traders, not to repeat myself, but trust me, bet test your strategy. Then, before taking a trade, always calculate in advance your risk reward ratio. So, where you're going to apply your stop, where you're going to take your partials out, or where is your target profit or profit target, and the R return per this trade before taking a trade. Okay. So, before, not when you're in. Everything has to be planned in advance. And then the third thing, uh, today I shared a couple of examples of correct trades. Okay. These trades saw one with a stop, couple one were wins. The point for me is that every single day when you have losses or wins, you review what you did because there's always to improve. I take losses, I have losses, I share them in the room, and I teach how to avoid them, how to be a better trader than me. And this is very, very important. Okay. So be humble, always look to improve, always to evolve. And thank you very much for following. See you next week. Thank you.